Entering the market with the candlestick pattern isn't enough. You need this strong confirmation to take a buy or a sell in the market. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, I'm going to show you a strong confirmation after getting a candlestick pattern to enter the market. That sounds amazing, guys. Subscribe on the channel, leave the comment below, like the video, and I will see you in a minute on today's video. Before entering the market with the confirmation of the candlesticks, by taking a buy or sell, this is what you have to confirm before you enter with that confirmation. So now, let's say the market is moving up. Remember that, making higher highs and higher lows. So remember, on the higher low, that's where we are going to be looking for buy. So you wait from these areas to be taking a buy. If you wait for the confirmation from this area, maybe this is a bullish, engulfing bullish harami or a hammer, there is a confirmation you need to wait for before you enter the market. So now, even from the uptrend to the downtrend, from the uptrend to the downtrend, you wait from the areas of lower highs. So from lower high, you are selling by the confirmation of the candlestick patterns. Any type of the candlestick pattern, bearish engulfing, bearish harami, or a shooting star. So let's start from the side of sellers. Let's say from here the market is moving down. As you can see, from high we are moving to the low. So waiting from the areas to be selling from the high, you get an opportunity of a bearish harami. That is a candlestick pattern. That candlestick confirmation, it's not the only confirmation you have to enter with. So what you have to do is to wait for another confirmation. So first, you got a confirmation of a bearish harami, but before you get a confirmation of a bearish harami, this is what you have to do. You have to wait for the candlestick to close in any time frame that you are using to enter from. You have to wait for the candlestick, this bearish candlestick, to close to confirm that this is a bearish, which we give it a name of a bearish harami. So after that, with the confirmation, after the time frame, or let's take an example like we are in the 1 hour time frame. If 1 hour candlestick, this is a bearish candlestick, in 1 hour, let's say we are at 2:30 a.m. So the candlestick will be closing at 10 o'clock. So you have to wait until 10 o'clock if you want to enter from the 1 hour time frames. You have to wait for this candle to close. So at 9:30, it's not confirming that the candlestick will be closing as a bearish candle. You have to wait until 4 p.m. So then after that, you confirm that this candlestick is bearish harami. That's where I'm gonna be entering from. So remember, you wait for the next candle to open. After 4 a.m., the next candle will be starting. So if that candle start open, what are you going to be doing at that moment? What you have to do is that you need the candlestick. Let's say we are opening from here. Now let's say the candlestick opened from here. So now we need the candlestick before we enter the market. We need the candlestick to first make a high. What am I meaning by that? Is that I need the candlestick to be leaving a shadow on its top. I need the candlestick to make a high before we start moving down. So if the candlestick has a high with this wick, that is a confirmation that after making a high, this is how it's moving. After making this high of this wick of the candlestick, I'm expecting the market to be starting making a low by moving down, even breaking the previous low of the previous candle. So this is how you need to enter from this. When this candlestick has first made a high, when this candlestick starts making a low, by breaking the low of the previous candle, start from the low of the body of the previous candle and even the low of the wick of the previous candle. These are the lows. So after making a high, I'm expecting the market to be making a low by breaking the previous low of the previous candle. So now I'm expecting the market to continue even breaking the low of the previous candle and even breaking the low previous support of the bullish candle, so that now we are expecting the market to be continue with the bearish candlestick. Okay, so that is an opportunity you need to wait for. So which means that after making a high with the volume, we are expecting the candle to be continue with the low. And then I'm also expecting the next candlesticks to be continue in the downside. So then you enter from that area with that confirmation. So taking a look from these candlesticks, the market was moving down. So we waited from this area to be entering for sale. After the confirmation of bearish engulfing, the next candle first made a high. How? Because we have this wick. Okay, so after making a high, there is a high probability for the market to be continue in the downside. So I will enter if this candlestick start to break below the previous low of candle. I will enter from this area anticipating the market to continue moving down. As you can see, the market moved down. So that is the secret of entering with the candlesticks. After getting a confirmation, enter for sale after the candlestick made a high before we start making a low. When we start making a low, that's where I'm gonna be entering from when the candlestick starting breaking the low of the previous low of the candle. Okay, let's now move to the chart. On the chart, the market is moving down. Okay, so we made a low. From waiting for the lower high, we got a confirmation of a bearish engulfing. So now, after getting this confirmation of candle, we are going to be entering when the next candle start breaking the low of the previous candle. But before that, you need the next candle or the new candle to first make a high before we start making a low. So I will need a candle first making a high before we start making a low by expecting the market to continue moving down, and then I will enter when the market starting breaking the low of the previous low of this candle. After that confirmation, I will be entering from this area, stop loss above the previous high, anticipating the market to continue. Okay, entering from this area, the stop loss is from this area. So now I would like to see the candlestick first making a high before we start making a low. So let's see what happened. So now we go to our target. So what I was talking about, okay, this new candlestick, before we start breaking below the previous low of this candle of bearish engulfing, we first made a high and then we started making a low from where we entered from, which gave us a confidence that the market will continue in the downside. That is an opportunity you have to take with a strong confirmation of the market to be going in your prediction direction. Okay, so now let's move on the side of bullish. Okay, here we have the market that is moving up. So we are in the areas of reversal from the higher low. That's where we are expecting the market to be rejecting. After that, we wait for the confirmation of bullish candlestick to be entering from by taking a buy. Okay, so remember what you have to do here. First, if you are in the 1 hour time frame or any time frame that you are using to enter in the market, you have to wait for this candle to close so that you can confirm that is a bullish engulfing. Okay, so after confirming that is a bullish engulfing, after closing in your time frame, you go ahead and wait for the next candle to open. When the next candle open, be careful about, you have to wait for this candle to make a low, okay, which means that the candle open from this area, from this side, we open from here. So then we are expecting the market to continue to the upside. So now we first made a low with this low wick on the bottom of this candle. After that, we are expecting the market to break above this high of the previous bullish engulfing. Then we can be confident that the market will continue in the upside. And this is our entry for buy. Taking a buy from that area, the stop loss is below the previous low, anticipating the market to be reversing and continue in the upside. So you enter from this area and you anticipating the market to be reversing and continue in the upside. After confirming that the candlestick first made a low, then after that we started making a high with the confidence that the market is gonna be continue in the upside. Okay, the traders were waiting the market to be making a low from this area, so then they got a confirmation of bullish engulfing from this area. The next candle first made a low before we start making a high, so this confirmation gives the market to be moving in the upside. Okay, so now let's take an example from the chart and see how can we enter from this confirmation. Okay, here the market is moving up. We got a confirmation of bullish engulfing again. This is an opportunity. The market is moving up, so now we got a confirmation from a bullish engulfing from this area. That's where we are going to be entering from. First, remember, you have to wait for the confirmation of the candle to close in your time frame where you want to enter from. Or if this candlestick is from H4 or 30 minutes, you have to wait for the 30 minutes to be closing. Then after that, you are going to be confirming that this candlestick will be closing bullish as you wish. So then after that, you need the next candle to first make a low before we start making a high. After that, you are going to be entering when the candlestick start breaking above the previous candle's high. So now we enter for buy from this area. The stop loss will be below the previous low, anticipating the market to continue in the uptrend. Our target will be from this area. So now let's see what the market is gonna give us from this. Okay, the next candle. Okay, first we made a low before we start making a high. You can see from this low. Then after that, we started making a high by breaking the previous highs of the previous candle. So now we are confident that the market will continue in the upside. So now let's see. We are moving up. Then we go to our target. So that's how you move on the side of buyers, with the confirmation of the candle making a low before starting making a high. Then after making a low, you enter from when the candlestick starts breaking above the high of the previous candle. So if you are a day trader or a scalper, this strategy is very powerful. You can use it. So guys, remember, as long as you are teaching this, you have to backtest before you use it on your real account. So guys, like the video, subscribe on the channel, leave the comment below, and we see you next time. Be safe.